Hello everyone, good afternoon and welcome to today's Trading the Markets Live, and we're trading the US Open, so you're all very welcome. If I get those off the screen and we'll start this presentation properly. So yeah, you're welcome to trading the US Open live here at the Live Trade Room. Now today is Monday the 27th of August. Hope you're all keeping well. So without further ado then, let us proceed to our risk warning. Please, of course, do familiarize yourselves with the risks involved in trading these markets. Okay, so before we begin, it's important to take a note, not so much on days like today with very little news events scheduled, but on other days you'll find, certainly in the first few hours of each open, whether you're trading the US, the European, or for that matter the Asian Open as well, you're likely to get a barrage of news events that can really impact some of your trade decision making skills. So do be aware of the news flow. So for that reason, we're going to just drag over Forex calendar, and we can see on this that very little news events today, and it's a bank holiday as well in the UK. So we're trading these markets and we don't have a big global player participating. They're all on their holidays, so they're having a long weekend. So as you can see, no more additional news for the remainder of the day outside of the more geopolitical tensions and wranglings going on with regards to global trade war talks and many other sort of geopolitical risks as well. So we're talking about the big macro events, for example, in the UK with Brexit negotiations and things of that nature. Okay, so without further ado then, let's go straight into the charts, and we'll look at what's been happening actually as a result of this morning's trade plan. So this morning, for those of you that were able to join us for that, we identified 3 opportunities for a bit of yen strength, but as you can see, they all bounced off our lows and has spent the day sort of threatening to push higher. So we've actually discounted them because they've moved against the direction in which we were looking to trade them. Now the same situation right now for the Aussie dollar. We're not looking to buy the Aussie dollar. It's pretty weak on bigger time frames. We're actually looking to sell it, but as you can see, we've really struggled to break below the 7,300, and now we're up at the 73.21. We're only 20 pips above that low, but you know, effectively these three markets are moving in the wrong direction for us. Now, a market that we had been looking at all morning was an opportunity to buy this market. As you can see, just recently, over the last half an hour, we've seen a bit of strength come into the market. Now, we look through different time frames just to see how that strength has really played out. When we look on the minute time frame, it doesn't necessarily fill you with strong confidence. Yes, we are continuing to grind higher. So a better example would be this kind of price action here, and we're not really comfortable getting in at these particular highs. So what we would like to do and wait to see if we get the opportunity would be if this price just rolled lower back to this previous level, where we could look to buy it at a slightly lower price. So and most of this move hasn't really filled us with great confidence, but we're continuing to grind higher. So let's see in the build up to the US Open what happens to this price action. But for now, we'd prefer to buy the pullback. So let's see if we get that opportunity. We very well may not get the opportunity to do it. So you've got a decision to make. Do you want to buy it this high and have a slightly larger stop loss sitting in this market? That, especially during these market conditions, is for us represents a medium probability trade at absolute best. So really, with situations like this, we want to see the bit of a rollback, the bit of a bounce back to the previous level, and then we can take the market higher. So let it do what it's wanting to do right now, and we'll see if an opportunity presents itself over the course of the trading session. Now, the other market we haven't taken our eye off, although we can move this low ever so marginally lower. We never really fully got the breakout to the downside that we were looking for. So effectively, this has just been moving sideways since Friday night, late Friday night, and we've got continuation today. So whether this continues or not, or eventually we get the breakout below the 1203, we've just got to be ready, willing, and able to actually trade that opportunity when it arises. We can use things like pending orders in these current summer markets. We're not that eager to be using pending orders, but on other occasions it's a viable option for us to get into this market. It's just the only thing that we're looking to see is to see if we get a confirmed close beneath this level, and then if we get the follow through. So if we sort of take back the level to this level here, we can see the low, we can see it rejected this market here a first time, and this level in here, and then the next time it attacks it, we're thinking, okay, well, at least now we've got the close below the 1303, although it's not a big close. We ask ourselves now, did we get the follow through to the downside? The answer is no, we didn't. So we got a bit of a reversal. So we got close to getting into it, but then had to back off because price action didn't follow through as we would expect it. And this is a potential trend trade to the downside. We're looking for these pullbacks to see if we can capitalize on these sell trades, and we're literally doing that again in at these prices. So what might happen is, you know, this market might not look to continue lower. It might actually want to reverse and start pushing higher, in which case we'll look for the same opportunities even at a higher price. So either way, we're looking for the sell-off is the next trade to the downside. And I'm very conscious of Friday's price action, which was it's got a bearish engulfing, sorry, a bullish engulfing bit of price action supporting it. And if you look on the smaller time frames, then we have had our first structural failure. Let's look at it on the hourly time frame. So this level in here represented our first major structural failure to the upside, and that is exactly the 1200. Now we've had a little bit of a boost above that, but now this grinding price action could give us a bit of a short-term rally back to the downside. So we kind of want to wait and see. So that's why we're and we also have an ascending level just above this level, so it might just represent an opportunity for us over the shorter term to get into the downside. We wouldn't be necessarily holding on for this market to be breaking the 1160, but we would certainly give us the opportunity to trade the structure to the downside and see how we get on with that trade. So at the moment we're a little bit off the lows, and I'm going to just move this down slightly so that we can monitor these levels. And what we're looking to do is remain as consistent as we can when we trade these markets. And we're getting a little bit of an impulse now to the upside. So we're getting our American friends getting into this market and driving prices higher. And they're now sitting at their trading desks. And there is a little bit of sort of positive sentiment creeping in to the US equity story. And now it just becomes a discussion about timing, and we don't really want to expose this much capital in an S&P 500 trade. So really we will get that opportunity. It's just a case of whether we can be patient for it and whether we have the time and the resources and like I said, the patience to wait for it. So we're getting structural failures to the upside in the pound yen. We're going to give a structural failure to the upside in the Aussie dollar, and we're very close to that significant structural failure on a 15-minute time frame in the euro yen as well. So we'll keep a close eye on the S&P 500. So let's just have a little review and see where some of these markets are on a daily time frame. So we've seen the strength creep in off the back of the German figure. I'll just show it to you quickly. It was a much improved actual figure than what was forecast, as you can see, and I'll show you a chart. So it was expecting the 101.9 and we got a 103, but you can see how the business climate in Germany has kind of fallen over to the downside over the last 4 or 5 months, and we're getting to see a bit of an improvement in those figures. So obviously that's positive for the eurozone, and we're getting a little bit of a strong bounce to the upside in the eurozone as a result. So we're seeing this sort of strong bounce to the upside. Sorry, let me. So we're getting a nice little bounce, but we're also running into the weekly high, which is a 1639. So let's see how this market interacts with that level. So no need to get too excited about a buy trade just yet, but we will keep a close eye on it. The pound dollar, so there's clear some strength leaving the dollar again. So we're kind of very close to Friday's highs now. The dollar yen, the yen is beginning to pick up a bit of traction. I'm just going to flick to the euro dollar. So the euro dollar is still fairly strong, and sorry, the euro yen, should I say, is looking fairly strong. Certainly a break above the 129.20 you would expect continuation to the upside there in that market. The pound yen, the pound is quite strong against the yen as things stand. So in a hierarchy, we've got euro, pound, yen, and then the dollar at the bottom. So bear that in mind, and we'll have a look at some of these. We're attacking these lows once more, so it's looking like we're going to get some dollar weakness continue to creep into the market. The dollar CAD now is just pulling back off its highs, so maybe a bit of Canadian more recent strength is coming into this market. As a result, we're just experiencing a structural failure to the downside. We're currently below the 150 level. Okay, so we're getting this little bit of a reversal over to the downside. Dollar CAD. So we're getting a little bit of move. We're getting this weakness creeping in. The problem we have is you can clearly see we've got a bullish day today in the dollar CAD, and again, I apologize for going back to our consistent approach, but generally speaking, when we'd only be looking to buy a bullish candlestick and sell a selling candlestick, although there is certain bits of price action that we can look to capitalize on, that like things like reversals at strong levels of support and resistance, that sort of make that look like a rule that's probably quite difficult to get your head round. But visually, when we see this and we see the rejection off the highs, it's what we'd prefer to do is to wait and see if we get a break below the daily low and capitalize on the move lower. But there is a bit of support coming in here just beneath these levels. So a market worth watching for sure, to see if we get that excuse me for the sound effects in the background. Okay, so we're getting quite a bit of a strong move really off that, well, a 10 pip move. Not necessarily a strong move. So let's come back to that. Yeah, the Aussie dollar is finding a bit of strength off this level, and we're very likely to see a little bit of resistance kick in, and as you can see, it's just plowed straight through it. New Zealand dollar. So the dollars. So really looking at dollar weakness is a viable trade for us. And for those of you that were able to join us for our weekly trade plan, you'll know that we've identified specifically some, if we started to see some weakness come into the dollar, then the two trades that we'd identified was the dollar Swiss to push lower, and the dollar CAD. So those were largely our predetermined So let's look through some of these other markets. There's the rejection we were talking about this morning. It was flirting with breaking above the 90.52, and we're very reluctant to get into this to the upside just because of the political sort of backdrop. The euro yen really struggling to break above the 129.20. If it does, it might give us an opportunity to buy it. So again, there's just sort of this sort of messy outlook really with some of these markets. We definitely we prefer trading markets that we've got such a clearer picture. So for us, this has sort of been moving sideways for quite some time, between a relatively small range. So really the range from the high to 143.24, maybe down to the 142.41. So there's an 80 pip range really within all this price action, going as far back as like 22nd of August. So that was early last week. Those are the market conditions in which we're trading, unfortunately. And as you can see, the indecision is perfectly represented in this candlestick as we look at it. Again, the indecision is clear to see in the gold market. We're not getting the bit of clarity that we'd be looking for. And now we're getting a little bit of strength coming into the US oil markets. Okay, so the only real trade as such is the US 500. Now what we're waiting for this in this market is a pullback, so we'll come back to this market shortly, and we're seeing a bit of a follow through. Now we won't necessarily trade all these markets, but that's what you want to see. You want to see a little bit of follow through elsewhere in that particular sector. Now we're not getting follow through on the European side as such, and the UK stock market and the French 40. Yeah, we're gapping higher, but not an awful lot has happened since. Yeah, so just the market. I don't know, Shane, if you're still online. So look, we've got this little market pushing higher, and we were discussing, I think it was around this price point here, the fact that actually our bias would be to the upside. I don't know, Shane, if you happen to be around, are you with us currently? I'm not too sure if you are. But those of you that were with us this morning, it was potentially a good trade idea. There was the potential exists, but what we found when we started doing analysis is that there was a little bit more. So we were looking for an opportunity for this market to just roll over to the downside, but then when we started to do our analysis, we realized that the pound was strengthening against the dollar, and the dollar was the New Zealand dollar was weakening against the US dollar. So what that meant was the likelier trade was actually for this market to push to the upside, just based on that little bit of analysis. Now, if this dynamic shifted, then yes, we could be looking for opportunities to sell. But the reality was we wanted to back off from the trade because we were looking at it potentially below the 92.30, which we didn't get. We didn't get the break to the downside anyway, so it's a useful. So yeah, we've got this really strong turnaround, and as you can see, some strength started to continue into the US dollar, where and that's effectively what we've seen. So I don't think Shane is with us currently, and we've seen sort of a breakout sort of going the other direction as well. So sorry, I was just wondering if a few of our traders were struggling to get in, but yeah, so they'll be joining us in the live trade room shortly, so that's fine. The pound New Zealand, it's quite useful to just assess, I suppose, how these markets are performing. So if we look at these again right now, there's strength against the dollar. And then if we switch over to the New Zealand, there's less strength against the dollar, let's say. So really there is the potential for the pound to increase in price against the New Zealand dollar. So when we look at the pound New Zealand, we don't want to be selling that market, and that's hopefully just something that you guys will begin to learn. Okay, so that is the New Zealand dollar, and that's just a little bit of sort of off-the-cuff analysis there. So we're not really seeing, apart from the this market here, which is the S&P 500, we're not seeing any useful opportunities. So if you guys have any questions about anything that we've covered, then don't hesitate to let us know. Right, so I'm going to go into these, and just as a trade plan, sorry, I do appreciate I'm just flicking around from chart to chart, but we're going to just change our trade plan for the session. Now I'd like to have a look at the dollar CAD. The dollar Swiss is another interesting market to see if we get a bit of squeeze. We do have these support levels in here. So maybe a small trade lower in the dollar Swiss. Continue to monitor the euro yen, because when we look at this on a daily time frame, it's loaded with indecision, isn't it, when we look at this chart? Okay, so we look at the euro yen, but we'll look at it on smaller time frames just to see if we get a break above this level. We're just squeezing above those highs now as we look at this chart. So really, when we look at the dollar CAD just in the bottom left hand corner, if we get a pullback to the 30.46 level, it might give us a nice opportunity to sell it and see if we get this rollover to the downside. So there is the potential to trade some dollar weakness, and we'll go into this market just on a 15-minute time frame. So we'll come into these two markets very shortly, and we'll keep an eye on the euro yen. Okay, well, the New Zealand dollar is just moving higher, so we'll look at the S&P and the gold market. Whoops. Gold. So now this will look a little bit cleaner. So we'll go into these markets to fine-tune some opportunities. We do want this market to roll over if we possibly can, even as far back as the 28.83, shake a few people out of the market and then maybe capitalize on the next move higher. And then the gold market as well. We're looking for an opportunity to sell it, ideally below the 12.03. We're currently at the 12.06. So a little bit messy in that one. Right, a market that I still want to have a look at in a bit more detail is the dollar Swiss. So straight away, with a little bit of analysis, we can sort of say that this was firmly in a channel. We got a confirmed break to the downside. We do have sort of a little bit of interesting price action here as the potential to support prices around these lows, with the outright low down at the 9800 effectively. So again, from a high probability trading opportunity, we kind of want to see this market break the lows here. Which are also the weekly lows, which is the 98.07 level. So this market is clearly struggling to hold on to the 98.21 level. It's providing a little bit of support and has done for a little bit of time there. So let's see if we get a break of that first when we look at these markets, and we'll come back to that. So if the Canada is strengthening against the Aussie, we might see a little bit of strength in the oil markets. A little bit of recent strength, slowly experiencing just a little pullback off the lows. You see, why we like using sort of a multi-time frame analysis approach is because we can see that this market has come off its highs, and on a 15-minute time frame, this is still technically just a pullback. So we are likely to see a bit of a retracement off these lows at some point. It could be much lower, but it's the next attempt to push higher, which hopefully fails, that will give us the true opportunity. Even though this little bit of price action in here on smaller time frames looks like a structural failure, but on a 15-minute, we just had a little bit of a pause and then a continuation in its pullback. So that's what price action can do. It can allow us to read these markets like books almost, and almost preempt, you know, what's about to happen with these markets. So If any of you guys are in any trades at the moment, do let us know while we wait for the opportunity to reveal itself. Even this price action here was a little bit on the messy side. It's hard to say consistently that you would sort of get in of a break of a candlestick like this, and then it starts edging higher and gapping up each minute. So it's just waiting for the opportunity really on the S&P. There's a bit of a positive sentiment regarding this market, so we're likely to see a little bit of a move to the upside, but we would like a nice normal opportunity to get into it, and not necessarily look to buy these highs if we can possibly manage that. The gold market has a long way to go. It's much more likely to sort of meander and start moving sideways. So we need to just see the dollar Swiss just move lower. Nothing happened with the euro yen. So to just explain what we'd be looking for, this market has bounced back to previous levels, so that's fine. We've had a bounce off the low, a couple of sort of mini structural failures, and now we're pulling back to a decent amount. So what levels would we expect this market to move to? Potentially number one, number two, excuse me. So these are the outright levels, or a double bottom, which could be classed as level number 3 to be aware of. So that's what we're looking to happen, and when these market bounce off these levels and they start giving us a bit of a turnaround signal to push higher, then that's what we're looking for if you're looking to buy the pullback. It just so happens we're looking for the structural failure, so we want to see if this market attempts to push higher and then rolls below that level, at which point we will look to sell at those levels and squeeze lower. So that's our plan when we look at these markets. That's what we want it to do, and if it conforms to that plan, we might look at trading it, and if it doesn't conform to that plan, then it's too erratic for us. We can't get a handle on it. It's difficult for us to stack the odds in our favor if we don't understand what's happening. And this is why we often stay out of certain trades during summer markets, is because the price action doesn't always necessarily stack up the way you would like it to. And like we always say, if you're in doubt, stay out. There's no need to be needing to sort of click that button all the time when even in your own analysis you're not really seeing a clear picture. And markets go through these ups and downs all the time, so worth considering. If you guys have any questions about anything covered, it's a shame that the session is a little bit on the slow side. No major surprise on a Monday, but what you often get is a lot of the preparatory moves for the week start to unfold on a Monday. So it's worthwhile monitoring the moves, except we haven't really seen any to any great extent across, you know, the most liquid markets in the world. So if you guys, anyone online at the moment, if you do have any trades you'd like us to look at, then do feel free to post them into the chat box. More than happy to look at some other markets. or even if you're new to joining us, do feel free to say hello. We welcome all newcomers. So if this market down here at the bottom just has a little bit of a pullback, somewhere in and around the 30.46, it might give us a fantastic opportunity to take this market, capitalize on a good trade. What we want to see in the S&P is hopefully quite straightforward. If we're patient enough, do we get the little bit of a pushback somewhere in and around this area in here, and to capitalize on a move to the upside. The reason why it's worth sort of perhaps doing that in this occasion is at current prices you've got a decision to make in terms of where do you put your stop loss. So let's just say, for example, we use this level in here as our stop loss. Then what that effectively means is a much larger exposure on the trade, and we're just not ultimately comfortable with a large exposure in this market under these conditions. So what we'd prefer is the market to actually come back to a level of previous resistance, which then could become support. And then if we decide to get in at this kind of price, then it just means that if we have a stop loss at the same place, then we're probably trading with half the risk that we would have been if we get in at these highs. Now, with all of these decisions, there's pros and cons. This market could fly up to 2,900 very, very easily and could prove to be a really strong, profitable trade. We would still like to err on the side of caution in terms of looking for those opportunities and waiting for the pullback and getting in at a much lower price. So then if we do get that move up to 2,900, then it presents us with a nice return on that trade, or a much better return than getting in at these highs up here. So it's a matter of decision making, and this consistently is our decision making process more often than not. If we don't capitalize on the breakout trade, and that even at the time presented a bit of a question mark over the actual setup that it was going to go higher, we kind of need something a little bit more substantial to work with, a little bit more volatility, a little bit more momentum to the upside, but we didn't really get that, and then we just got this slow grinding movement higher, and now we're moving sideways. We might end up pulling back to these levels. So so that's just a little bit of analysis there. That's what we're looking to do with some of these markets. We want them to conform with our ideas and be nice and patient and just wait for the opportunities to come to us. So we're seeing this market slowly grind lower. The break below was the 30.46, and now we're waiting for the pullback back to that level roughly. We'd be happy to get into that. Okay, so as we wait for these markets to move or to do something, we can. One market I'm looking closely at is the dollar Swiss, just below the 98.21. They're all kind of giving us slightly different pictures, but I'll just put you on mute just for a moment, and we'll see if we do get these opportunities sooner rather than later. So I'll be back to you very, very shortly. Okay, so just keeping a close eye on these markets, really. Unfortunately, not an awful lot going on, as you can see. We're still waiting for this market to kind of pull back with any kind of significant purpose. The only potential trade could be buying above 28.87 with a very small minimal risk trade of 28.86.1. But that is sort of quite tight, really, with this market. Still needing the dollar Swiss to break below the 98.21, and we're just wanting the pullback to kick in on the dollar CAD. So I suppose, like we always state, really, we don't mind whether we buy or sell markets as long as we understand the market conditions and stack the odds in our favour to trade the market in that way. And look for high probability opportunities where we're looking to trade the trend. Now, we've had lots of confused markets recently, but that's just trading the market conditions. So as a result, we haven't taken as many trades as we would normally do. We're looking forward to the market coming back to normal and seeing if we can capitalize on some of these big runs, big moves. So guys, I'm very conscious it's the top of the hour, and we do have the first hour of this trading session through our YouTube channel, obviously completely free of charge for those of you that can join us. But we do continue to trade these markets during the remainder of the session through the live trade room. So please do feel free to read the description just below. We are offering a 14-day free trial, so if our style and our approach is of interest to you, and we pride ourselves in hopefully clarifying the trades that we take with pure transparency in what we do in terms of educating our traders and getting them to adopt a fairly structured approach to trading these financial markets. So then do click on the link below and do feel free to join us for a 14-day free trial, no obligation of any kind. And if you decide to stay with us for our to join our live trade rooms every day, then there's a cost of $9.99 per calendar month. So hopefully you'll find that on the affordable end, and that's something that's very important to us here at the Live Trade Room. So really it's just a contribution towards your access, really, that's all it is. We would be delighted to have you join us. So do have a look at that, and please do, if you like the broadcast, please do click the like tab and subscribe to the channel, and you'll be able to locate us here on a daily basis. So on that note, guys, I'd like to wish you all the best for the afternoon. If you'd like to connect with us, you can do. If you want to, appreciate you may be watching this as a recording, so please do search for us through YouTube and just look for @TheLiveTradeRoom, all one word, and you'll be able to see us and subscribe to our channel fairly easily. In addition, you can join our Facebook, Instagram, Twitter and LinkedIn, and the details are there all up on the screen. So thank you very much for joining us as always. We will be, those of you that are currently online from the Live Trade Room, then we'll be switching over now in just a couple of minutes. So we'll look forward to seeing you all through the Live Trade Room shortly. So from everyone here, do take care, and we look forward to seeing you soon. Bye for now.